All right, it's the midweek edition of the show. We're at the close of yet another trading day. So let's give you that breakdown of market activities today and insights into some of the events driving the market. This is Market Pulse live on News Central in partnership with Nairametrics. A very warm welcome to you. I am your host, Joanna Mustafa. And on the show today, Senate increases windfall tax to 70%. Will this affect investor sentiments towards banking stocks? We hope to have that conversation. And in South Africa, Morgan Stanley is predicting the JSE stocks will outperform cash and local bonds. We'll explore potential drivers of this and more. As well, worthy of our spotlights today is a banking stock that has shown quite some resilience year to date. But first, let's begin with a quick market recap on the NGX, the Nigerian exchange continuing its bearish run this week. Perhaps investors are still having their attention on the fixed income space with NPR announcements. It's also possible that, and possibly more likely, that earning results slowly trickling in, investors are taking profit. So we're seeing the all-share index down 12% to 100,365.17. Will we see the NGX dip below the 100,000 mark by the end of the week? We have 2 trading days to see whether or not that happens. But yes, continuing its decline this week. If you come to the top gainers, the gains seem to be strengthening on the charts. International Breweries leading the pack with a 10% gain amongst others. And then if you come to the top losers list, we have Secure Electronic Technology down by 9.43%. UBA Livestock and United Capital also making the losers list. We're coming to the movers list now. FCMB, they're doubling as both a top gainer and a mover when it comes to trade volume. They're leading the pack there with trade volume at 133.92 million when it comes, to that. And of course, we're also seeing the banking stocks dominate. Access Corp seems to have a strong place on this top movers list. Of course, we'll be tracking that and their activities in the week ahead. Coming to the currency market, the Naira appears to be stable. Same as yesterday, 1,533 Naira, 55 kobo. We're seeing some sort of stability in the currency market today, right? So we'll explore that conversation and much more. Olushola Ore-Oyeniku joins me after the break to assess the pulse of today's market, so stay with us. You're tuned in to Market Pulse. Right now, we're picking up the pulse of the day with Olushola Ore-Oyeniku. He is the head of research and strategy, Greenwich Merchant Bank. Thank you for joining me.
Good afternoon, good evening.
All right, good afternoon, good evening, whichever one. Yes, it's great to have you, inshallah. Let's begin with your views on yesterday's marginal increase in NPR. CBN is seemingly less hawkish with the hikes, perhaps giving an ear to the private sector, but with inflationary pressures ahead from the likes of the new minimum wage and perhaps further government handouts. How important do you think it would be to maintain a more hawkish stance on interest rates, or do we need to see more of a balance here?
Okay, so the increase was reasonably anticipated before the meeting. During our various engagements, that was extensively spoken to. Before the July meeting, we had several metrics as being tracked by CBN, majorly inflation rate, currency, and also the GDP growth. Well, you reckon that the 50 basis points to 26.75%, yes, it's marginal, but technically what the committee did was to stem possible panic in the market that might result from an announcement of an aggressive NPR increase by tightening monetary conditions without necessarily increasing the policy rates massively by the asymmetric corridor from plus 500 minus 100 to from the 100 basis points minus 300 basis points as it was before. So reasonably, we believe that the leadership of the Monetary Authority, they continue to emphasize the fact that there are major consideration or focus is to stem the tide of inflation rate and also stabilize the exchange rate as it is.
Right.
So already on the back of this, you take into consideration what happened in June from the figures provided by the National Bureau of Statistics. Inflation rate increased marginally by 24 basis points to 34.14. You recall that before that, we had about 3 consecutive months whereby a month-on-month inflation dipped. But as at July, we saw an increase of about 0.17% to 2.3% on month-on-month. So we had safely emphasized that will happen. So I believe that expecting further tightening the benchmark interest rates after this meeting, we need to look at the various mandates and the situation of those various barometers of measurement, i.e. inflation rate and exchange rate. But my sense is, given the various initiatives that's abound now from the 150-day tax rebate, so to say, and then things that are being done from the fiscal side, I believe inflation rates will taper down at least going forward.
We'll see whether or not, we'll see whether or not, things temper down in that regard. And it's interesting you brought up the 6 trillion and, of course, the Senate signing that amendment. So coming to the Nigerian Senate, they've taken things a step further. They took it a step further yesterday, not just passing the amendment bill, but increasing that windfall tax on banks' FX gains from 50% to 70%. What's your assessment on the impact of such a move? And is there any added effects on activities of banks on the capital markets with the ongoing recapitalization exercise?
Yeah, so the attendant impact of the 50%, so the Finance Act was amended, given the changes in the windfall tax that was recorded in 2023. So Nigeria isn't the first. We've seen cases where it happened in Italy, South Africa, to mention but few. So in a bid to stem or probably navigate the evolving macroeconomic environment, a lot of measures were put in place. One of which was to collapse the exchange rate bucket, and that stemmed huge FS gain that was reported by companies. However, on the other side too, some other companies, manufacturing companies, also reported losses on their FS liabilities. So I believe to balance things up, that's why CBN had come up with that. And then you know that CBN, the federal government, has the prerogative to do as it is appropriate in order to provide sustainable achievement. So I believe that we need for some clarification in terms of the adjustments to for banks that have already paid the 30% income tax. So are they paying additional 20? And what else would they be?
Sorry to interject here. Do you see investors on the capital markets, responding to this, in any way, this developing story? Do you see investors responding?
Yes. So the first week we saw a 3% decline in the banking index, the market. However, since I've stemmed, the tide have stemmed as we speak now. So I don't believe that. I don't think that would adversely affect the ongoing recapitalization exercise. Investors still value in some of the banks that are bound. So I'm not sure that will adversely impact on their position.
We'll continue to monitor how investors respond. But let's move to East Africa now. Kenyan banks, they're warming up for their recapitalization exercise as well. There are plans by regulators to raise capital threshold for banks to 10 billion Kenyan shillings, which is about a 10 times increase from the current threshold. We're seeing the activity exercise, activities like this drive, attention to the NGX. Will this be any different for the Nairobi Stock Exchange, or are we going to see more mergers than banks heading to the markets to meet up with this new capital requirements?
Yeah, so from the figures available, about 24 out of the 39 banks fell short of the required minimum capital. So as at today, using today's value. So I believe some of the small and medium sized banks that fall short of this would probably look for towards merger and acquisition, whilst the larger ones would look into the stock market to raise capital. Last year, there was about six consolidation exercises that happened, 6 banks rather consolidated. They made so last year, I think they were being proactive. So I believe there will be opportunities for merger and acquisition, and then there will be increased activities in the capital market to raise funds. Knowing that 9 banks apportioned for about 75% of the total industry assets in Kenya. So my take is there will be opportunities for merger and acquisitions, and also there will be some take in the capital market.
All right. So, I mean, opportunities for mergers, possibly more mergers, and we may see the number of banks perhaps even halve in Kenya. That's something we'll be tracking here. Let's come to the Kenyan currency now. The Kenyan shilling, we know, has slumped to an 8-week low against the dollar. Markets continue to, take or respond to the effects of the anti-government protests. How much of an effect is this having on trade and tourism activities in Kenya? And do you see perhaps even a reversal, right, from them emerging the best performing currency in H1 to maybe even the worst in H2?
Okay, so primarily the finance bill that was raised in order to raise additional capital was what prompted, or that was where all this is started from, and the protest commenced on the 18th, and then a full-blown one where about 39 people were reported dead on June 25th. So this has impacted severely on trade and tourism. Like there's disruption to supply chain activities around transportation, logistics, also the port and customs. So also seen when investors' confidence in the market. So from then till now, when the protest started till now, the market has lost about 4%. Investors' sentiment is very, very low now. There's political stability, and that has really provided the investors a lot of headache. Let me put it that way, and as such, local businesses too. We're also expecting that economic growth would also taper down. So for tourism and all this. So I believe yes, the currency year to date has lost about 8%. But I believe if this is not stemmed, that's the protest, the ongoing protest is not stemmed in the board. If there are no interventions, quick interventions as we speak, I believe the Kenya shillings would
continue to
further depreciate in value. I believe something in the realm of about 16% that we are seeing year to date, it would further decline than that. So this would primarily be driven by the unrest that we are seeing now, economic disruption, and then the foreign exchange earnings. All those will be impacted severely, and that will provide
we'll see
that evidence to that.
Yeah, we'll see whether the Kenyan government, I think the president has reshuffled his cabinet now, whether or not that creates some calm in Kenya and has a ripple effect on the currency and the capital market. Finally, before I let you go, Shola, Morgan Stanley is predicting South African equities are poised to outperform cash and bonds. Very bold predictions there. They anticipate stocks yielding 18% over the next year, outperforming estimate returns of 13% for local bonds and 8% for cash. What do you reckon would be the drivers to support these estimates?
Okay, so firstly, the central bank in South Africa had guided that by September, they are looking towards reducing their interest rates. That's the policy rate. So that's on one hand. For inflation, South Africa is also, part of what they are also monitoring is the inflation rates. We've seen a downward trend. It's about 5.1% now, from the 5.25, 5.3 or thereabout as was in April and May. So given that we've seen that downward trend, and also a negative one was the fact that in Q1 2024, there was a decline in their GDP minus 0.1% from the Q4 2023, 0.3%. So we put all this in a bucket. So where the yield on the 10-year government bond today is about 9.66, and so the market is about 16%. So getting to about 18% from now to the year end is not something that is not possible. However, we also want to be mindful of the fact that there are other things that would also impact on that. The unemployment rate, one of those things that have been mentioned by the South African government, apart from inflation, is the unemployment rate, and then some other measures around productivity and the currency. So I believe that if the rate cut in September is effected, getting to 18% for the equities on the South African market is not something that is not possible.
All right, we'll keep an eye on that.
I believe those metrics will be. So we'll keep an eye on that and price market accordingly.
All right, thank you very much for joining us. Head of Research and Strategy, Greenwich Merchant Bank, Olusola Ore-Oyeniku. I look forward to having you in some other time on the conversation. Up next, right, the NGX has seen a steady rise in competitiveness of penny stocks. One of them taking our spotlight today is Jais Bank. So stay with us, we'll get into it after the break. You're watching Market Pulse, and in the spotlight today, Nigeria's first full-fledged non-interest bank, which operates under Islamic banking principle, Jais Bank. Its share price has seen substantial growth with a year-to-date gain of 11.3%. This makes it one of the top performing amongst banking stocks this year. And looking back last year, Jais Bank had an impressive performance with its share price increasing by 111%. But is this a buy, sell, or hold for you? Is this enough to convince you to buy, sell, or hold? The poll is up on X at Nairametrics, so let us know what you think and where your sentiments lie on that. But to provide more insights, we have joining me, David Olujimi, financial markets analyst with Nairametrics. Good evening, David.
Hi, good evening, Joanna.
All right, great to have you in, though from a distance, but provide us with a quick background. Provide us with a quick background to Jais Bank. Considering the stock's performance year to date, do you see it matching the growth rate of the previous year, 2023?
This year, I don't think so. But looking at the performance of that stock, we see resilience as always, resilience from last year, resilience even this year. And one of the reasons is because Jais Bank is one of the banks that has very few capital to raise. They have their demand for capital is quite small. So we're looking at the bank that would probably just be on a growth trend. They're already at 11%, but I don't think they can match up with last year.
Okay, they may not be able to match up. We'll see about that. How would you say the bank's fundamentals, right, and strategy perhaps have supported its share price growth this year and, before now?
So basically, the bank is a non-interest bank, right? So they don't earn interest income. While other banks are cashing out from high interest rates in the country, Jais Bank is one of the banks that doesn't really. But one thing is that it's a double-sided thing. In a way, when high interest rates are killing corporates and manufacturers and people who need funds, they see Jais Bank as a very reliable option because the bank is a non-interest bank. They can literally go there. There's a transaction that is called Murabaha transaction, where they just buy, the bank buys for the clients and they sell it to them at a marked up price. So some of these transactions have been able to give the bank at least a way ahead. Like in 2023, they had a 42% year-on-year profit growth. We are yet to see their figures for this year, but I'm projecting it to be even higher than last year's because there's a lot of attention. At 30% interest rate from the banks, we are going to be seeing a lot of non-interest transactions going on this year.
All right, we'll wait to see their numbers come out. But we know that Jais Bank as well started off regional with 3 branches in Abuja, Kaduna, Kano. It now operates under a national license. And with this recapitalization exercise, I know you referred to it earlier, where does it stand in its plans to bolster its capital base?
So Jais, basically, the bank stands in a very good place. We don't need to mince words. Jais Bank stands in a very good place. It has the lowest capital to raise. Basically, His capital was increased to 20. His new minimum capital base was increased to 20 billion. It already has 18.2 billion. Bank has just about 1.8 billion to raise. The bank is a bank that is owned by some of the top known industrialists in the country. The way I even see Jais Bank may not even come to the market to raise funds. They just literally need to do a private debt placement, and that's all. That's all they need. They need to do a private share offering program. That's all. Even Dangote Industry owns a stake in the bank. Dan Tata owns a stake in the bank, and some of the big guns, especially in the north, own stakes in the bank. So they stand in a very good place.
Yeah, so they probably wouldn't be breaking a sweat, right? But we also know that it's a penny stock, and with penny stocks, we've seen a lot of competitiveness on the NGX. What are the risks and opportunities, and perhaps your strategy when it comes to dealing with such penny stocks on the NGX?
So one thing with dealing with penny stocks such as this that have the propensity to generate dividends. For example, Jais Bank is going to be paying dividends by August. And it's quite small though, but for stocks like this that have a propensity to generate dividends, one thing you do is that you have like a medium-term strategy. You don't go in short. You don't short on stocks like this. You literally go in at the start of the year, maybe first quarter of the year, you go in, you exit, you exit at a period where you know that your dividends payment is sure. You exit at the middle of the year, of the next year. But it's not the kind of stock you hold on to you want to make. You can hold on to it for big gains. It can obviously generate big gains, just like we've seen with Julie PLC that has done magic in the NGX this year. Okay, so that's a strategy around it from your perspective. Thank you so much. Always a pleasure having you in, David Olujimi, financial markets analyst with Nairametrics. All right, where do your sentiments lie on this particular stock? Share with us on X at Nairametrics, buy, sell, or hold. Up next, we're heading to the African markets. Let's see what's going on there. African markets are mostly in the red. Egyptian exchange broke its bullish run. It's down 0.36%, and there are no surprises with NSE, which is down over 0.75%. Right, we're seeing that happen. The JSE as well is pretty much flat, yeah, Casablanca Stock Exchange, Moroccan All-Share Index is also bullish, pretty much. So we'll continue to see how things continue to develop on the African markets, and that's pretty much the show today. On our radar, of course, will be the bank's response or alignment with the now retrospective windfall tax of FX gains to the tune of 70%. And will stocks outperform cash and bonds in South Africa within the next year? That's something we'll also be tracking. All this and more right here on Market Pulse. 4 p.m. every weekday. Don't miss it. Join me tomorrow, same time on News Central in partnership with Nairametrics. Here's a performance of markets outside of Africa.